the market moves in the path of least resistance. Okay, I think a lot of people, but I'm not sure as I'm not there. What it means is that once you have the market playing out, right, once you have the chart really going, right, as far as there hasn't been any previous point that has stopped the market before, right, it will keep going in a continuous direction until perhaps there's something that had previously stopped it before, right? That's something that if you come to understand, then you start understanding why does the market turn where it turns. The market moves in a path of least resistance. So think about it this way, like here, this very point here, right? The market was coming down. It got to this point. Who knows the reason why it turned? Likely nobody. And then it started to do what? Go up again, go up, get to this point, and then it does what? It started coming down again, right? And upon coming down, they decided to what? To stop here, right? Using previous price movement to predict future price movement. It's as simple as that. So we know that what somebody will call it support level. Okay, there was so much support there. Now one thing that was so unique about my trading style and evolution in the market is how I drew my support level as well. So you'd have most people sometimes draw out like a whole region and say, okay, this whole region is my support level, or demand zone or whatever they call it, right? But I came to understand using mathematical explanations that what we say the market turns in, the market reverses in turning points, right? And then I focus on the word point and said, okay, if we're talking about points here, then the last week represents my point in the market. So I'm not really going to call the whole zone my support area, but the very point where it reversed, I'm going to consider it as what that support level, that turning point, that key point in the market. So one trick that I'm going to show you guys, right, which is a little bit dicey, but very smart, is that as I discovered this, I realized that following price action, reading what is happening on the market, anytime the market kind of comes close to these kind of turning points, right, based on historical price data, using historical price movement to predict future, it never, indeed, if it wants to repeat the same thing, closes beneath that level, right? It never closes beneath that level. What do I mean by close beneath that level, right? Now, for some people who have been learning different sphere, different school of thought, when a market, like they put a point here and then you have something like this, right? This kind of wicks running beneath this zone. Let me zoom it so that those at the back can see well. Then they say that, okay, structure has been broken, right? That was not my perspective on the market. Research, evolution, and then a scientific approach. I said, the only time I am going to classify the market to have broken structure or to have invalidated a support level is when I have a solid candle close beneath that zone. When I have a solid candle close beneath the zone, then I can be confident to say, okay, the market has broken this structure. But as far as we are having wicks just running through those levels, then I am not going to consider the market as having broken that level, and then there are chances of what? Reversals in that zone, right? Now, look at the beautiful thing here. The market actually started from the top here, right? And then perhaps if I didn't jump in on this trade at the very top within this range here, which is like me answering my question, why does the market turn where it turns, and jumping in at the very beginning point, right? You have most people trying to sell into the market around this point, trying to sell into the market all the way down there, right? But this is where you come to understand extreme patience, right? Something like this right? When you have a move being late, you could have already started enjoying the market all the way from the top here, right? You missed it, but you find it an excuse to jump in, right? Yes, you can be profitable, right? And then most people will indeed end up being profitable in those kind of situations, jumping in the trade when it's continuing. But what differentiates that professional, topmost, whatever trader is that they know their rules. It's usually different from everyone's rules, and then they follow their rules. You get it? They know their rules. It may be different from what everybody is saying on social media, on YouTube, but they follow their rules. So me, in a situation like this, I am not jumping in on the trade. Now let's use some reasoning to justify that. Okay, if I want to buy here, why am I buying? Okay, I may have seen certain reaction here, somebody can see if I identify some other block, support level, whatever it is, right? But candlestick wise, which is part of the price action key confluences, right? There isn't any significant thing showing a reversal here. So there's no point for me to want to start buying it. The candles are so solid bearish. They are dipping down. So if you're buying here, you are jumping in front of a moving train. The train is really going so deep, but you want to just jump. You see yourself maybe Hokogan or something to stop it. The market will run over you and then you take some dirty losses, right? Now, okay, I don't want to jump in front of a moving train, but I want to join the party when it's late. Now, if you're trying to sell into this trend, you're going to ask yourself that, okay, I'm going to sell here, I'm going to put my stop loss here, but the main question is, why are you putting your stop loss here? You know, it's not about, you wanting to put it there. It's about why you want to put it there, Now, one thing that I've taught me is that stop loss needs to be where stop loss needs to be. Have you ever heard that statement before? Stop loss needs to be where stop loss needs. Some people think that you can place stop loss anywhere in the market. Some people say, oh, they just fancy the fact that I set 5 pips stops on this trade, I set 10 pips, I set this. It's not about the fanciness of it, it's the reasoning behind it. Why did you set the stop loss there? Now, if you set your stop loss within a range like this, you're solely using opinions. You just think that, okay, it's reasonable for me to risk 30 pips. It's reasonable for me to risk 5 pips, 10 pips, 20 pips. You're using your own sentiment, opinion to set stop loss and say, okay, this trade is going to come all the way down here, right? So that is one of the key reasons why I'm saying I'm not going to jump in front of moving to or join the party when it's late, because when I'm originally supposed to set a stop loss in a trade like this, then I need to put my stop loss all the way up here. Why? Because that point signifies that reversal point in the market. Are you guys with me? Are you really with me? Or you guys are sleeping? Is it boring? If it's not boring, shout no. Is it boring? No. Good. Thank you so much. So I'm like, if I need to jump in on this trade and properly set my stop loss, then I need to put my stop loss all the way up here, which is like what, over 400, and this XAUSD gold. So 400 pips, it does not make sense to the risk to reward. You understand me? So I am not going to what? Take this trade, jumping in front of a moving trade, or they're joining a party when it is late. I'm not going to trade it. So what will I do? Okay, I might as well want to wait and see what happens here in this zone that I might be, right? What happens in this zone? Are we going to get some reactions? Are we going to get some stuff like that, And if we get a reaction, I may jump in. If I get you guys enthusiasm, right? If I get you guys enthusiasm, energy, and yearning to learn, right? Trust me, we can go deep. But if I get you guys being very sluggish and sleepy, I'll be like, maybe I'm boring these people, let me. So put in that energy, sit up, jack up, and let's dissect this market, So yeah, following through, I want to see what is happening next, right? So within this zone, we have some first, reversal happening. You guys can see clearly. What I have here is what? A black, blue candle, right? Now, you want to use reasoning here, right? You want to use logic. Let's use logic. We've had this bearish candle, very big one, drop. Another big bearish candle, drop, big. So we have a continuation of 1, 2, 3, 4, 5 bearish candle. Do you think just because the market in that support zone, this small bullish candle, can override or supersede those bears are pushing down. We see the market is what in between what demand and supply, buyers and sellers. So imagine like 10-man army trying to pull the market to one side, and then one-man army comes in to say, let me take it down, and you guys be like, oh, let's follow the one-man army. They will run over you. That's what most people encounter in the market in real life situation. So me, something like this, I'm not trading. I'm just going to be patient. Let me see how the bulls try to really, truly, indeed, if they are really present in this zone, overtake the bears, right? So you would want to wait for the next. That's why you see, that's why it's relevant when you're looking at something like this from the higher time frame, right? Because, like I said, it has embedded a lot of lower time frames. The 5 minutes is in there, the 15 minutes, it takes what's the name? 4 15-minute candles to make one 1 hour candle. It takes 4 1 hour candles to make one 4 hour candle. So if I'm looking at one 4 hour candle, I'm looking at all this small interaction and then one final decision. So if a 4 hour candle has closed and I'm not going to take a decision here, it means that I have to wait for the next subsequent 4 hour, right? Which is going to also contain a lot of information, which is going to validate what I've already set aside, So you wait for the next one.